FutureTrend channel and our analysis of commodity currencies for the date of 10 May 2018. Once again, we note that today is a day of publication of Consumer Price Index in the United States. And you know that at the moment inflation story is a driving story for the United States dollar because of solid economic reports we've seen for the last time in the United States should support a view of probably a higher printing of inflation indicators in the country. From that point of view, we see that the yield of United States government papers are on the rising path, and we see that the market starts to reevaluate the situation with interest rates in the United States, expecting that the Fed will be more aggressive in its efforts to hike the rates. And from this point of view, of course, the United States dollar should remain rather supported. Anyway, we try to caution you against over positioning in the long positioning in the United States dollar. And probably the Australian dollar is in the process of a possible, let's say, a small turnaround. Let's see the picture. At the moment, the pair is trading around 74.71 and making a low yesterday around 74.12. Probably the pair should develop a kind of correction, and in that case we expect it could grow even to its current bear trend, which is located at the moment around 77.30. For those looking for a shorter trade opportunities, probably such kind of rebound should be used as a selling opportunity. As regarding the New Zealand dollar, that's here the situation is really very different because of today's rather pessimistic view expressed by the members of Royal Bank of New Zealand at its regular interest rate policy meeting. They even told that they are ready not to hike the rates, but probably to cut it in case of necessity. And from this point of view, of course, we see the Kiwi dollar much lower this morning. During over the course of last trading day, it already lost around 1.1%. And from a medium to longer term perspective, the Kiwi should remain weak while trading below its moving average 200 daily line located around 71.56, and all in all, any kind of rebounds to that area should be used to sell the currency to chase the trend lower. And dollar Canada, absolutely different picture. Here we were rather lucky to sell the pair on yesterday's uptick very closely to the point of psychological barrier 130. We sold at 129.90, and we see that now the Canadian dollar is really very well supported, and the pair is back to its former levels around 128, and probably in the nearest time it will try to break below 128, and that means that the dollar Canada should test some lower levels. Our target at the moment is 127, where we were trying to cut our short trade recommendation. But once again, we acknowledge the fact of very selective approach by the market to the different currency pairs. As you can see, the Kiwi dollar is much lower, the Canadian dollar is much higher at the moment. That means that we should keep an eye on domestic economic numbers. And from that point of view, as we told before, the Canadian dollar is looking pretty much supported at the moment, because contrary to the situation with New Zealand economy or Australian economy, where, as you can see, the central banks are ready not to hike rates, but they are ready also to discuss the situation with lower rates. Anyway, we see that the Bank of Canada's next decision should be for sure to hike the rates at its next regular meeting scheduled for June. Thank you very much for all of your attention as regarding the dollar ruble, which this currency at the moment is in the middle of its range between 60 and 65, and here we prefer to stand aside at the moment. Thank you very much. It was your Future Trend channel. See you later, and bye bye for now.